So I finished grading all the 6 and 7s that I have. So I'm working on sending anyone that's sent in 6 and 7. Hopefully tomorrow I'll send you a file that you can input into another file I'll put on Blackboard and give you all your detailed grades 1 through 7. I'll probably do it in 2 columns. So one column will be your actual grades. I won't send you grades by email. I'm going to send you a code. And when you enter that code into the other spreadsheet, it will bring up your grade. But I think I'll do it in 2 columns. So one column be your actual grade and the other column where you can play around. What if I fix this? What if I fix that? You can see what was most material. I'm only doing that for those that have turned in 6 and 7. Now, some people have turned in 6 and 7, but not 5. I'll probably send them the same thing. They'll just have zeros for 5. Some of y'all lost a lot of points by leaving one thing out you could probably do in 30 minutes. So I think it'd be pretty eye-opening when you see it, that you say, well, I got a low score on 6, but you just didn't give me the beta chart or something like that. And if you go back and do that, you'll find that you can get it a lot of points back. So look for that tomorrow. I'll email those that finish 6 and 7 with an Excel file, and you'll copy and paste that into another Excel file, and it'll bring up everything in detail. We're getting close to the end here. Remember last class gave you a lot of the paper 8 stuff. What I want to do is I just want to prove to you that I fixed paper 8. So I'm going to bring in that file. I also want to prove to myself just to make sure. So I'm going to go in. I'll share the screen as soon as I load one of the files. Under content for it's under class models and templates and the relative ranking model. I'm going to bring up oh, I don't know, I'll do the energy one, Chevron and Exxon, and bring that one up. And I'll share this one as soon as it loads. So it should all work. I think what my problem is, and this is something I've noticed with Solver, if I have 4 or 5 spreadsheets open with Solver, if I run it on one, it actually changes it on all the others. So I think that's why it's messing up. We'll see. I don't know if any of y'all have tried it. I know, Ryan, you sent me yours, but that looked like an older version. You should be able to tell it's the correct version because I did add the words cheap and rich. So that's a good thing that you have the right chart if you do that. And so you just go over to the side. Where you see the R squared, you can say R squared is only 48% or 50%. And so you do data Solver, and you should just be able to run Solver. I don't know how long it's going to take, but it should be maximizing the correlation. So everything should be set up. Looks like it's working. So if y'all have problems, email me immediately because that probably means others are not working as well. I've never had, yeah, it's working well right now. I've never had to build this for the entire class. This is, and you can see you got a good chart here. The only thing you got to do is, you know, put that diagonal line in there once you fix it all. So just insert picture. Just put, no, not picture. Sorry, insert. There it is. The shape. And just put the diagonal line right down the center. And everything above that line is cheap. Everything below the line is expensive. And then find your chart, your company, and mark it. One thing I did, which we should do this more in the investment society, one thing that helps a lot is running this the first time and then looking for the outliers and then deleting those outliers, and boy, that helps a lot. I couldn't delete your companies, but none of your companies were outliers. It was usually some of the smaller companies you would never do anyway. And we got a pretty good collection here. There are a couple outliers here, but you know, if I got rid of those 2, it might help the R squared a little bit. And you're welcome if you want to try to get the R squared higher, but you can look at this one. The R squared is already 88%. And that's the R squared. That's not the correlation. The R squared is 88%. The correlation is 94. So it's a strong model. And if we look at Chevron in this scenario, Chevron's ranked 26th, and it's the 28th most expensive. So it's a little cheap, but not much. Exxon, the same thing. Valero. So all of these companies are perfectly in place. And then I don't know who this company is. Cabot and oil and gas. They're number one and the most expensive. So it's working pretty well. What I didn't do was add any constraints over here on turnover margins. So that's something to look at. You can see with the energy companies didn't put anything return on capital. So I might add a 10% constraint there just to bring some in. And then something in your paper, just look at where it allocated and discuss those. So I put a huge amount on EBITDA margin, which makes a lot of sense for this industry. It actually didn't put anything on the 5-year default, but put 18% on the volatility of the stock. That makes sense given what we're going through right now. So some of these are very specific to COVID and what's going on with COVID, so it kind of makes sense that you get these kind of numbers. And then it put most of the allocation, and you would expecting price to book, but actually put most of the allocation EV to sales. And we're seeing that. Some of y'all may find this as well. So you go with what you have, and you see what the model gives you, and then you got a graph that you can put in there into your paper. So paper 8 should not take y'all that much time. I've seen a couple of y'all's drafts, and it looks like you're in pretty good shape. So paper 8 is one of the faster papers. So now we're working on paper 9. Remember, I'm making paper 9 pretty easy for you. Remember to look at last Thursday's class. I go through in detail. All I'm asking on paper 9 is a simple moving average and a Bollinger Band, because those are the two easiest ones to do in Excel. You can build it yourself, and I think there's actually some advantage to building it yourself. So I showed you how to do that in that video, and you can actually do them together just like I did, because the Bollinger Band uses the moving average as well as the standard deviation around. Now, the Bollinger Band is really pretty impressive that it seems to follow pretty well with most stocks, and it does give you a good indication if your firm is broken out on the top or the bottom. It's either they've broken out and something new's happened, or they're overbought, oversold. So you have to kind of make that decision. But it's a pretty good tool. I just like looking at it, even if I don't trade on it. So what I want to do is talk about technical analysis to make sure. I'm doing this a little bit out of order because I wanted to do last week so that you could get started on paper 9 if you wanted to, if you haven't already been doing paper 8. But now I want to give you the background so you can give a little bit better introduction. So technical analysis is using past data. So in our cases with the Bollinger Band and moving average, we're just using stock prices. It can include volumes, can include other items, but it's past historical data that is no interpretation whatsoever. You're just taking the data and you're just plugging it in, looking for trends. So where does it come from? Well, if you remember the efficient market hypothesis, a lot of people believe that technical analysis is a violation of the efficient, and people who don't believe in the efficient market hypothesis. However, it's actually just the opposite. Technical analysts overbelieve in the efficient market hypothesis. They believe markets are extremely inefficient. And so looking at fundamental numbers, looking at cash flows, and looking at return, everything you did on paper 4, return on equity, turnover, margin, all those kind of things, that's a waste of time, because the market adjusts to those things over in a nanosecond. You're not going to beat the market by analyzing that stuff. So what you're looking for with technical analysis is the supply and demand imbalances that are working themselves out. And you can see as it works out, the stock's going to go in a pattern that's pretty predictable, or at least the technical analysts think it's predictable. So you might remember James Fama, famous name in finance. I think he's a Nobel Prize winner. Eugene Fama. You can actually go out there, actually encourage you, go out there and find Eugene Fama. Some of his YouTubes are pretty interesting. So yeah, he speaks, he's very well known. He's getting up there in age, but he's still a really sharp as he can be, brilliant guy, very intimidating man. He's working at a company right now. I forget the name of the firm he's working at. It's interesting. He's got a, he believes markets are efficient. So you kind of say, why would he work at a firm that tries to beat the market? But it's a behavioral finance kind of thing. Very interesting guy. obviously extremely famous in finance. So their belief is stocks trade at their fundamental values, except when there are supply and demand imbalances. So Eugene Fama wanted to go out and test to see if technical analysis worked. He had his weak form test, and he asked the question, can you beat the market by looking just at historical prices? His answer was no, but there have been several tests since then where people found that it does work. The most important one, which is the one I'm requiring you for paper 9, is moving averages. Moving averages measure momentum. So stocks that are above their moving average tend to keep going higher, and stocks that are below their moving average tend to go lower. So momentum is probably the best technical thing out there. A lot of hedge funds use it, and a lot of other managers use it. It seems to be pretty reliable. But Fama did not find that when he tested this back in the 70s. So other people found other ways. Dr. Lowe is another one. L-O is his last name, Andrew Lowe. He has a really good book on technical analysis. Dr. Dalquist, I think is D-A-H-L-Q-U-I-S-T. Dr. Dalquist used to be at UTSA. She wrote a really good book on technical analysis. So there's a lot of books out there. Some of them are just not readable. They're way too long. So there's been many tests on technical analysis, whether or not it works or not, but there have been studies that have shown that technical analysis works. I guess when I became a believer was in 2009. We use Ned Davis Research. That's something you might look up. Ned Davis Research. They have I don't know if it's a Twitter account, but it might be Twitter. I don't use Twitter, so I can't tell you. But they have some stuff for free that you can get access to. Most of the stuff is extremely expensive, but we used Ned Davis when I was at UTSA, and I became a believer in certain things. In particular, in 2009, at the market bottom of 2009, Ned Davis sent out a report saying they've never seen all of their indicators for market bottoms lining up together like it did at the bottom of the market in 2009. We saw that as well. We started doing some stock trades and taking off hedges and all that kind of stuff because we'd never seen it in the history of all the data they had. They'd never seen everything line up that this is when you should be buying. The problem with technical analysis, it does not do a good job at calling market tops, but it does do a really good job, it appears, the times I've seen it, at calling market bottoms. I don't know how it would have done here this past May, June in calling that one, but I encourage you to look up Ned Davis Research. Ned Davis is still there. He's not the owner. He sold out to another firm, but it's still Ned Davis Research, an incredibly excellent firm. So see if you can find any. I don't know if any of y'all use Twitter, but you might try it. If you find it, let me know. I'm kind of curious. They do have some free stuff that they provide, some charts. They have like this ongoing discussion. So I strongly encourage you to add them to your ongoing reading list. So y'all let me know if you look it up. Those that have traders accounts, let me know if you're finding Ned Davis Research. Their charts are very distinctive. What I liked about them especially is if you had a question like you want to know how do stock markets do when the Fed is tightening interest rates, they'll do an analysis. They'll send it to you immediately. If you like it, they'll make that part of your ongoing reports. And they do it fast. They have a really good database. So you just go to them with a question. So you might ask the question, how does small cap value stocks do after the bottom of market? Is that the best time to buy, or is that not a good time? And usually within a couple of hours, they'll do the analysis and send it back to you. You look at the chart, say, yeah, I like that chart, add it to my my list. It's a really, really high service quality firm, very data-centered firm, but all about technical analysis, trying to call when to buy or when to sell a stock or investment asset class. So technical analysis actually that markets are informationally efficient. That is, markets are really good at assessing releases of quarterly financials, any kind of news on the company, those kind of things. Markets are extremely efficient at that. I don't know if y'all noticed when Pfizer announced the vaccine. My word, Carnival Cruise Line stock was up 30-something%. Zoom stock was down, I forget how much, but it dropped a bunch. Within a nanosecond of that announcement, the stock market reacted immediately. So technical traders assume information is all priced into the market. The only thing that's unknown is the supply and demand balance. Are the buyers outnumbering the sellers, or the sellers outnumbering the buyers? Whenever you have that case, you'll start seeing some patterns in the stock that will tell you something. So they actually believe that the valuation process is so efficient, but the supply demand is so uncertain that watching stock patterns is actually more valuable to you, because of what it tells you about supply and demand is more valuable to you than fundamental analysis. In fact, they actually believe fundamental analysis is a waste of time. This comes from, I think, Dalquist's book. The art of technical analysis is to identify trend changes at an early stage and to maintain an investment position until the weight of evidence indicates the trend has reversed. If you've ever heard of the Dow theory, Charles Dow, his theory, it's all about these trends. We'll talk about them here a little bit. You're looking for the trend to change. That's a lot what the Bollinger Band is trying to figure out is, has something unusual happened? Are you still within a normal band? And then Dalquist's book also says technical analysis represents a rational choice for bounded rational investors. Bounded rational investors, they're people who do not have infinite time. They don't have millions and millions of hours to go through all these fundamental reports. They're bounded. They don't have infinite amount of time and resources. So given their constraints, technical analysis of time, it allows these investors to make reasonably well-informed decisions with less information than is required to make decisions using fundamental analysis. Now, let me show you an example. This might not be the best example, but this is a firm. I talked to this guy, Frank, and I can't say his last name. He came and spoke to us at UTSA. I was really impressed, really amazing guy. It was a technical analysis fund offered by Wellington Capital Management. We didn't invest with him, but we found him pretty interesting. I'm kind of glad we didn't invest with him. Let me show you his fund really quickly. So for some reason, his fund completely stopped in April of last year. Their returns since inception were about 8.5% per year. The S&P was about 11.5%. You look at the chart, you can see he trails the S&P quite a bit. I think he actually got fired somewhere in here, but just way behind the S&P. And then they just gave up. They just stopped. That doesn't prove technical analysis doesn't work. It just proves that this particular fund didn't do that well. But there's a fund that's one. So there are some mutual funds out there that are 100% technical analysis. Follow the market pretty well. They're up. They made money. Doesn't look like they reduced the risk all that much. And in fact, some places you can see they were more volatile than the market. So doesn't look like you're, it's not like you're getting lower returns, but with lower risk. It looks like you're getting both low returns and higher risk. But listening to this guy, I mean, he had a theory, he had a philosophy, he had data supporting it. He was doing things that made sense to him. It was interesting. My thought was, well, if technical analysis works, he's probably got it working. And then he didn't do very well. I don't know when we talked to him. It's probably somewhere around back in here where he was tracking pretty well. So I'm glad we didn't purchase him because it definitely didn't do anything. We had a real unusual mutual fund that opened itself to really unusual strategies. So we thought maybe he would be a good one to try. You might look his name up and see if he's still around. I didn't look him up to see. I only met him that one time. So there's one. If y'all find others that you're interested in, let me know. I should find some others to put. There's not that many technical analysis mutual funds out there. All right, so technical analysis, it says the trends reflect human emotion and behavior. It's driven by supply and demand. Technical analysis says there's no reason to try to figure out what these forces are. We can't possibly understand them. It's too many hundreds of thousands, if not millions of people making decisions. So forget about that. We're not going to figure it out. There's explanations. So just accept that the prices are telling you something about supply and demand, and don't try to figure out why they're doing what they're doing. Supply and demand is driven by fear and greed. You may have heard those terms before. Dr. Andrew Lowe, that's a big part of his discussion, is how fear and greed are the major determinants of markets, especially at the extremes. Right now, we might be in a greed market, where markets just going up, going up, going up, no matter what the data says, no matter what earnings are. Technical analysis believes these shifts from fear to greed and greed to fear are predictable and repeatable patterns. We move from extremes of optimism and pessimism. We sell winners too fast, we hold losers too long. And I actually think some of these support levels that we see are related to people, you know, I've never tested this, but it might be related to the volume of trades. So if you see a high volume day, that price on that day might become a pretty good resistance or support level, because so many people have that stock price in their mind because that's when they bought. And so if they bought and the stock falls and then comes back up to that number, they might say, well, next time it hits that number, I'm selling. So it creates resistance. Or if they were thinking about buying the stock and they didn't, and then it comes back to the number, then they're going to buy it and it creates a support. So resistance level is the stock hits that level and it keeps dropping down off of it. It goes up to it, bounces off it, comes back down. Support level is it drops down that level and then bounces back up. And you'll see that in those Bollinger Bands. So Dow theory, you can look this up. I don't know if y'all have seen some of these commercials on TV. They're pretty hilarious. I saw one guy, he said he was making 8% a week without any risk. He would be a gazillionaire if that were really true. But he was pushing this software, and one of my students from, I think it was actually from this very class, he said he was going to go to one of those, they meet in these hotel lobbies or whatever, hotel conference rooms. And so he saw one of these commercials. He wanted to go and see exactly what they were selling. So he went, and it was a software package. And he said the whole thing was Dow theory. They were charging a lot of money to do stuff you could actually do yourself if you wanted to. It's out there for free. But they, so he said it was nothing more, just, they didn't anything fancy or new. They were just doing what's been being done for over 100 years now with Charles Dow. So that was interesting. He brought the whole thing back to me. I actually kept it, and I thought it was pretty entertaining that someone was making money actually stealing something that's been out there for over a century. So what Dow says is there are uptrends, then there's a downtrend, then you hit a bottom, and then within that there's retracements and consolidations where things go sideways for a while. So what Dow is trying to do is figure out where you are. Are you in the uptrend? Are you hitting the top? Are you in a downtrend? And he says there's primary trends, secondary trends, and noise. The main thing he was looking for was a primary trend. These are set by the early investors, those who have growing confidence. And then they're then supported by the middle investors responding to the good news. So the early investors, they're responding before the good news hits. Then the middle investors come in. They're responding to actually good news. So it's pretty obvious trades because the market's going up with the news. And then you have the speculative at the end, mainly the retail investors. They're responding to the fact that things have been going up. They're not responding to news. They're just responding to the fact that they missed out, and they just want to get in before it's too late, or get out before it's too late. Secondary trends are the ones that look like they may be a trend, but they're not, and those fool us. And then you just have noise. This is the one that retail investors tend to get tied up with. And so what Charles Dow said was, err on the side of being late. It's better to be late to be wrong, so don't overreact, so be patient. And so that was he was after. Now he was doing this obviously way before computers were available. And so what people used to do, it's interesting listening to some of these people before computers, they actually would do all these lines on a huge chalkboard in their offices, and they would actually plot them by hand. using graph paper. Pretty interesting stuff. Boy, it's amazing. Now everybody does it on a computer in a few seconds. Moving averages really help you find those trends. So momentum and moving averages. So I said, you know, use the 200 to 150 day moving averages. That's what I showed last class. And buy when the price is above the 50, when the 50 is above 100 and the 100 is above 200. That shows the stock has really, really strong momentum. Now, obviously, you can use things besides the 50 to 100 and 200. You could use the 20-day, the 10-day. If you want to make sure you're not waiting for everybody else, then just use the 199-day, get a day early, and maybe that help you on the trend. Markets are definitely sensitive to these 50, 100, and 200-day moving averages. And then you sell anytime you cross a moving average. Anytime the price goes below a moving average, you sell. You can actually just draw lines onto the stock price and try to find those resistance and support levels. When I was at UTSA, that's what our CEO did then. And it gave him what he thought the bottom of the market was going to be. And just by doing it by hand, I went back and redrew it using regression analysis, least squared. And his doing it, just eyeballing it, was way off the numbers. So I had to go back to him and tell him he was off like a good 40%. It looks really close when you do the lines, but when you actually draw the best line, it doesn't look good. So just drawing lines. That's why I gave you FinViz. FinViz will do this for you. And some other sites will as well. We'll give you those lines for your company. So if you want to pull some of those charts in, remember you could do a third thing. And I'll give you credit for that. So you might find something on one of these websites that does that. So moving averages can really help you because moving averages often become the resistance and support point. So stock falls down to its 200-day moving average, that's become support, and it bounces off the 200-day moving average. Our stock has been way below its 200-day average, and it comes up and hits it, and that can be resistance, and it can go back off of that. But if you see it break through, either way, break up above the 200 or break down below the 200, that can be a breakout, and I can tell you, wow, this stock is, if it breaks out on the upside, it's about to take off. If it breaks down on the downside, it's about to really tank.
Hey, Professor. Does that happen because like so many people pay attention to those lines?
Yeah, the 50, 100, and 200 definitely, and I think the 20 now is becoming pretty popular. I don't know why the 90-day is not one, because everybody watches the 90-day volatility. I don't know where these numbers came from. It's probably a lot of it's just tradition for many, many years. But you'll definitely hear people talking about the 200, 150. And there's a lot of, so since so many people are watching it, I think you're absolutely right. Yeah, they be self-fulfilling prophecies because so many people are watching it. Now, day traders, I've got a former student in Austin who's a day trader. He's got a prop desk there. They may be looking at 20-minute moving averages. So these things can be all different levels, but the 50, 100, and 200 are probably the most popular, and the 200 really gets the most press. You can also look at sentiment. A lot of times technical analysts go against sentiment. When everything's positive, they start selling. When everything's negative, they start buying. Small investors tend to cause this because small investors get in. There's been some studies that when the cover of Business Week says buy stocks, that's usually the top of the market. When the cover of Business Week is telling everybody how horrible the stock market is, that's probably, so there's certain periodicals that when they publish really good news or really bad news, that usually means that's the top or the bottom. Odd lot trades can be real important. We were seeing a lot of odd lot trades. Those are usually retail investors. If you see a lot of odd lot trades after the market's been up for a long, long time, it's reaching new highs, and you start seeing odd lot trades, that usually means the market's about to crash because retail investors are the ones coming in. Put call ratios are really good. This is something you might do for your company. If you're looking for something else to try to get that extra credit on 9, you might look at its put call ratio. So puts are bearish, callers are bullish. So what's the mix on your company between put options and call options? Short interest can be another one. I actually gave you the short interest ratio for your company for paper 8. So if you're interested in that one, you could certainly look at that one. But short interest is how many people are shorting your stock. These tend to be really sophisticated investors, but not always. That can be an indication that the stock is due for a downtrend, especially if you have a lot of people shorting the stock. They want the stock to go down, so they may actually try to cause it themselves. How much cash are mutual funds holding? When mutual funds hold a lot of cash, that's usually the bottom of the market because they usually get it wrong. Margin balances, when margin balances are high, that's a good time to get out of markets because that means investors are too optimistic. Look at advisors' opinion, man, they're always bullish at the wrong time. Why? Because advisors don't advise on what it makes sense or what's logical or what they believe. They advise based on what they think their customers want to hear. And if you're in the middle of a bull market, you're going to advise that stocks are good, get in, because that's what everybody wants to do. It reminds me of a lady many years ago, 2008, or no, 2000, during the dot-com burst. She asked me how she could get her advisor to recommend that she could buy tech stocks, because she had one advisor that was actually going against the trend. And I told her, boy, it's a dangerous time to buy tech stocks. And she looked at me like I was an idiot. I hope she didn't do it. She would have lost 80-something% of her money if she'd done it. But a lot of time the advisors, they'll tell their customers what they know they want to hear because they want to keep their business. That's more important than actually giving good advice. Market strength is important. So what technical analysts want not only is a good trend, but they want a good trend that has strong support. So 1999 is a good example. We had a strong up market in 1999. But if you looked at it, it was extremely shallow market. There were just a few massive tech stocks that were driving 99. Most everything else was flat or down. So when you look at market breadth, so markets may be hitting all-time highs, but how many stocks are advancing versus declining? So in 99, you had markets hitting all-time highs, but you had more declining stocks than advancing stocks. And it's just that the advancing stocks were the massive ones that kept getting just driven up. So advanced decline lines are important. 52, this is more for markets, not for individual stocks. So this one doesn't really work for individual stocks. But how many stocks are hitting their 52-week highs versus how many are hitting lows? That's a good indication of you got a broad market or not. Look at large company versus small companies. If it's a broad market, the small companies should be doing just as well as the large companies. That's another thing in 1999. The only thing going up was tech stocks. Everything else was going down, and especially smaller companies. And then the Dow theory, he says, look at transportations versus industrials. And that may not be working anymore, but those are the two industries that tend to turn when the economy is turning. They tend to respond more quickly. They tend to be ahead of the game. So if you're in a recession, you'll start seeing transportation and industrials picking up because they're starting to see things turn around, and you'll see them pick up before the whole rest of the market does. I'm not sure that still works, but at Charles Dow's time, that's what he was looking at. Technical analysis can sometimes be nothing more than data mining. So you got to be careful with technical analysis. You've got to first show that it's actually worked in the past. You need to back test it in and out of sample. Don't use all of your data. Test it in different periods. You got to make sure there's some rational reason for why it exists. And remember, technical analysis is focused on supply and demand. So if you find a technical trend, I realize this contradicts what Dalquist was saying, is you can't try to explain why this has happened, but a lot of technical analysts think this is a waste of time. But in my mind, if you're seeing something that gives an indication to buy or sell, I think you should at least stop and ask what's going on with supply and demand that caused that to happen. And the reason you need that rationale is you need to figure out, is this something that's going to continue into the future? If I can have some sense of why it's occurring, then is it something that's going to be an institutional habit that's not likely to end? So yeah, you need to know that it's going to keep going. So technical favorites, the moving averages. You can just do a simple average the way I showed you. You can weight more recent days more heavily than later days if you want to. The relative strength index is a lot like the Bollinger Bands. It's trying to find stocks that are oversold, overbought. Bollinger Bands, real simple to do. You don't need much data to do it. You're trying to find stocks that, again, overbought if they break out on the top, oversold, they break out on the bottom. Trend line, this is just drawing lines out of Finviz does it and puts their lines in exactly what mathematical model they're doing to put those lines in, but trying to find support. You know, sometimes you connect the bottoms or you connect the tops and you think the next top's can be on that same trend line. Sometimes it's pretty simple. The MACD is similar to RSI and trends, moving averages. Again, you're comparing short term to longer term to try to see if the trend, the shorter term trend is shifting, if something's going on. In Bloomberg, if we had access to Bloomberg, you'd probably be doing paper 9 using the BTST function. So if you have access to Bloomberg, if you're going to the library and using Bloomberg, boy, you could get some easy extra points on paper 9. Just go to BTST. They'll give you, oh, like that, last time I looked, it's, you know, over 100 charts that they'll give you. They give you the definition, how it works, how to use it, and then you can bring the chart in for your company, save it, put in your paper, and add a paragraph or 2 into your paper, and you got your extra credit. There are a lot of helpful websites that you can use for technical analysis. I'm not going to. I think some of these are ones I talked about before. Let me get in there and so y'all can see how you can use some of these. Oops, sorry. I always hit Skype when I mean to hit Zoom. So here's the stockchart.com. Look at these terms, my word, anchored VWAP, Bollinger Bands, you've already seen that one. So here's one where if you need to get the definition. So in your paper, you want to explain first what it is. You can quote these sites or just reword it into your own words. And he's got plenty of stuff here that you can look at. Here he's using a 20-day moving average. I forget what I was using. In mine, but you can see how they have the band. Now he does it with the candle chart, which does make more sense. But I just, it's too much work. I mean, if any of y'all want to add a candles chart, I'd be really impressed. I think Excel actually has that built into their Excel model. So you can see how they're looking at support levels and they're drawing these trend lines. The stock, you know, obviously they're going to show something that has a pretty obvious trend line for their example. So you can read some of these websites and get some good indication for your firm of how you want to. The Moku Cloud is a really popular one last semester. So that may be one you want to try. Some of these are not that difficult to calculate, so you could actually try doing it yourself. Or go out there and find one that does it for you online. So you just have to remember how to spell it. I don't know how Ichimoku, I assume. I don't know how to pronounce it. I've never heard anybody pronounce it. I've only seen it written. So it's not one I've ever used, but I get a lot of students really like that one. And you look at all these technical indicators they have here at the bottom. I'm trying to find some that might be real popular. The MACD is a really popular one. You might look at that one. That one's definitely very commonly seen. Yeah, I'm not seeing them. Some of the ones I've seen, and they don't have them all, but they do have quite a few of them. Some of these I've never heard of before in my life. So oscillators are interesting. So you might get comfortable with word oscillators. So again, we're trying to we're looking for trends and trying to figure out the trends positive or negative or if it's changing. So you know, some of these charts, it gets pretty technically looking, but a lot of them are a lot more confusing than they actually are when you actually do the calculations. So I'd be really impressed if you read one of these and can actually build it yourself. All right, so there's one site. Let me show you one other one here. Stock TA, I think I showed you all that as well, but it's good to look at a few of these. I think you're going to find paper 8. Paper 9 is not a very difficult one. So they have they show it for the markets. They have RSI charts, trend analysis. I haven't used this site in a while, but stock chart. I don't know how I got QQQ in here. You know, kind of go around with it. Maybe they say login, so it's possible this is a pay to use site. There's one right there, Fibonacci. That's one you might look up. That was a really popular one. So you might look at, it's FIBONACCI. That's one you might do. That's really, really popular. There's another one that I see a lot, but I don't see it in any of these, and I can't remember the name of it. So MACD again, trends overall. So again, it's a bunch of charts. You want to have at least 2 of these charts in your paper, the moving average, and then the Bollinger Band are the ones you're after. Okay, questions on technical analysis? I showed y'all FinViz before. If any of y'all find a really, really good technical analysis website, send it to me and I'll send it to the class. I know there's got to be some other ones out there that are really, really good. So, you know, let me know. I can bid this is not my area of forte. I don't like technical analysis except for at the stock. I mean, at the market level. I don't like it individual stock level just because one thing reading Dalquist's book, you get into it and she goes in detail on each one of these, and oh my word, it's just mind-numbing. And every chapter is, this indicator has worked really well until 2012, and since then it hasn't worked anymore. And this one's worked really well until 2015, but it hasn't worked since. Or this one hasn't worked well in 20 years. Just indicator after indicator that used to work, but no longer it seems to be working. And you just get tired of reading that over and over and over again. Of all these indicators, and some of them you look at them, you just, it takes you an hour to sit down and figure exactly what they're calculating, and without understanding that, you really can't talk about what it's measuring. So, all right, I'm not hearing any questions on technical analysis. Are y'all good? So what do you have left then? You have the exec summary. So what are you going to do in the exec summary? So the key, and on Thursday night, I'm going to show you some examples, executive summary, so that you can see what they're supposed to look like. I'll pull some from the UTSA library. This is maybe the paper, this is the only paper of all of them that actually do grade for how it looks, the appearance, the formatting. This is when you want to make it look as much like a sell-side research report as possible. Look at the fonts, look at the colors, look at the size of the fonts. Has some nice summary charts. So I'll give you some examples of these. One I always like because he did a really, really good job of it is the Coca-Cola one. Again, I always go back to that one, but the reason I like his is he wanted to work in this area. He had his heart set on it, so he made sure whatever he did looked as much like the sell side as possible, and sure enough, he got a job on the sell side. So you've got to make it look like the job you want to get. So this is the exec summary. He's got a nice frame to it. This is pretty common up here that you have your recommendation right there at the top. All right, this is Ryan's paper. I actually have a couple of reports that Ryan wrote when he was at JP Morgan. So his name was over here. So you could actually put your name over here, make it look like a true sell side report. So I like the way he did it. He made it look, it's professional. We're initiating coverage. So if this is your first time to do this stock, then that's what you say. We're initiating coverage. You have a really quick view of the company. You're putting a hold on it. You got your price target. You got the price. Catalyst is always good to put. What do you think is the most important things? It's not the most important 20 things. You can see he just has 2 things in there. What are those things that really are most important to this company? So he says geographic diversification and joint ventures in the high growth areas like Monster. All right, so there's the story for Coke. Investment risk, not getting the money out of acquisitions, too much debt, which is still a problem for them, and deteriorating fundamentals. So can this firm really turn itself around? Then just a little bit of a discussion, and then some charts. So here's, you go back through, you don't have to create new charts. Essentially what you do is you go back and you look at, now chart, this is actually pretty important. A year-to-date chart of how your stock is done versus the S&P is really, really good to do. R versus its industry, whatever you can get your hands on. If you can find an ETF of your industry, you might do it, but just a real quick chart. Notice how his color coordination stays. He decided on dark blue, maybe you're going to pick purple or red or green, but keep that color coordination. So, you know, this is a marketing piece as much as anything else. And remember, when you put this on LinkedIn, this is going to be the first page of what they see. You notice his index comes after the exec summary. So he does the exec summary and then the index. So the very first page people are going to see is your exec summary. If you do this really well and it just looks pretty, the human resources people are likely to give you a chance at an interview just because you can do stuff that looks really professional. I don't know what this is, so I'm not really sure if that's, I guess that's the absolute return or relative return or something. He did an example, he did a summary of all of his models. So paper 7 and 8, he found a way to put them all together. Then he just gave some gee whiz information at the bottom, company data, market cap, shares outstanding. I'm not sure these are the right things to show, but he's got the current price in there twice, but you know, it just looks very professional. So we'll talk more about this next class, what kinds of things you want to put in here. It really is a matter of you finish everything and you go back through and you glance, you kind of skim through your paper and you find those things that are the most important. Some might be company specific, some might be industry related. Bring your valuations in. You probably won't have the technical analysis in here. That paper probably won't, but if it's something important, that you can certainly put that in there. You could put the technical analysis in as part of showing the stock trend, but you'll definitely have something on valuation. I don't know how he got his price target. If you just take the average of all of these or average of all the base cases or whatever, but find some ways to get a price target is actually pretty popular. I'm not a big fan of price targets I'm more of wanting to see the range, but it's pretty popular in the sell side research, and it's usually up there at the very top. You put the company. So Ryan's paper, because he went out and did what I'm recommending you do, go out and find some good sell side reports and just copy them. What did they put in the report, and put that into yours. Some of them do go on for a couple of pages. You want to try to keep this to 1 page, but if you had to go 2 pages, I wouldn't count off for that. If you go over 2 pages, though, I probably will count off for it being too long. And that's 2 pages with a lot of charts. So there's really not that much text. So you're not typing much here. You're spending most of your time on formatting. He made it look real professional. We put his name in there with color coding throughout. So, you know, think about the style that you want to use. I'm sure he used a pre-formatted that you get just out of Microsoft Word. So that's perfectly fine. Microsoft Word does a good job of putting those in there. All right, questions on, well, we'll get into this more on Thursday and finish everything up on Thursday. Questions on the exec summary. You see what after here, this is where you really put the icing on the cake of your entire paper. Good chance human resources will read this and make sure you can write, and then they'll just flip everything and look how professional it is. Pretty impressive paper throughout. Just looks really professional all the way throughout. If you actually read what he wrote, you discover that he actually wrote some really interesting, insightful things throughout. So it's not just cosmetics, it's actually something there. Some of your papers, you didn't do the 2 columns, or your margins are too thin, or you didn't do full justify. If you're going to put it on LinkedIn, I would, maybe you don't have to do it for the class because I don't count off for those things. But before you put it on LinkedIn, you might stop for a couple of hours after the class is over and pretty the whole thing up so that you have something impressive to put on LinkedIn. As I said at the beginning of the class, this paper in this class is getting several of my students jobs that they could not have gotten. No one would talk to them because they're from UTSA, and UTSA wasn't well known. But as soon as they saw this paper, they got an interview, and many of them got a job based on it. So you want to really clean it up. And if you like to, during a winter break, you know, you do as much as you can before the semester's over. During the winter break, if you want to work with me to really get it cleaned up and ready for LinkedIn, plenty of time without traveling to Costa Rica this winter break. So I can certainly help you with that. But try to get as close as you can for your final submission. All right, so I don't know when paper 8 is due. Some of y'all are still working on, some of y'all are working on papers 1 and 2. If you want to resubmit papers, there's something on Blackboard to resubmit. So tomorrow, I'll try my best tomorrow to those that have finished paper 6 to get you the detailed rubric response. So you can start editing, because 8, 9, and 10 are not that lengthy of papers. You can probably get all 8, 9, and 10 done in about the time it took you to do papers 1 and 2, and probably in less time. And so you can really focus your efforts to get everything cleaned up. If you haven't been turning in papers, I'll probably be emailing you this pretty soon here to figure out what your status is. I know some of you are graduating. It makes me really nervous that you're further along than what you've indicated to me. Some of you are doing really well. Some of y'all have done exactly what I said, is 5 to 10 hours every week on this class. Don't get behind, stay up. So I think you're seeing what the life of a security analyst is all about. You can't procrastinate. You got to producing stuff all the time. If you do, you'll be in good shape. All right. I'll stay on if y'all have questions. I don't know if there's any final questions. And we'll finish up paper 10 on Thursday, and then talk about what we need to do the rest of the semester. Probably be a short class on Thursday. And I can certainly stay around long on Thursday and even tonight. If you have specific questions on your papers, I won't put it on the YouTube, but if you have specific questions, we can do that. All right, I'm done. If y'all have questions, stick around and I'll stay on as long as y'all need.